So, for those who obviously you guys know me since you're following me from other servers or whatsoever, my name is Kevin. You guys know me as the Market Bishop. You primarily know me from my option trades, whether they're day trades or swing trades. A little bit about me before we get started. I've been trading for 11 years now. I'm 23, so yes, I did start at the weird age of 12 years old, but that's a story for another day. But I've been a little swinging, I've been day trading, and you guys know I'm a little bit more unique compared to a lot of the traders you guys see on Discord, because I'm a very old style kind of trader, similar to JP here, who I'll introduce in just a second. But as you guys have seen, my charts are pretty clean because I only use price action, volume, and overall market sentiment. So today, basically, the whole reason why this live is going on is because JP and I, who again I'll introduce in just a second, we're gonna go over kind of like a recap, a very brief recap of what happened in the market the past week, where the money's going to, right? Where big money's going to, market sentiment, and then we'll go over tickers that either we like or you guys have in mind. So, before I start introducing JP, just want to let you guys know right now right now I made it where you guys cannot speak in this live session, just so we can keep out any unwanted noise. But if you guys have any questions, feel free to post it in the Ask Bishop channel, which you can see right below the main chat. This can be tickers that you would want us to look at, or any questions you have in general. We'll try getting to as many tickers and questions as we can. But yeah, so to get started, basically over here, the guy you see who's streaming right now is the agent. Both of us will be streaming. First it's going to be him, and then it's going to be me. A little background on agent. His name is JP. Feel free to call him that. He is my business partner, and he's actually been trading. He's one of the very few people I've seen on Discord who's actually traded longer than me. He's actually been trading, you could correct me if I'm wrong, but over like 15 years. So he started a long time ago, so he's been through a lot of the market shifts, and he's been through even hard times. So in terms of the market, so he's seen a lot, he knows a lot. He's going to be going over the whole market recap and market sentiment in terms of where money's rotating to. So yeah, feel free to go ahead, JP.
Thanks, Kevin. First of all, I want to thank everybody that's here. As Kevin had mentioned, Kevin is my business partner on a couple of things that we are working on together. Um, I'm the old one of the group. I'm 41 years old. I've been trading since the age of 22, and I began my trading journey with $25,000, and through strategic money management and through the ebbs and flows of the market, I was able to turn that into over $250,000 through a lengthy period. It wasn't something that I did overnight. It wasn't through trading options. It was through trading equity. It was through holding. It was through uh, strategic allocations, both in bonds, equity, and hedging my positions with options when needed. I am a fundamental trader. I think technical analysis is great, but I do think that at the end of the day, fundamental analysis is the key towards success of any type of endeavors when it comes to your money. I don't consider traders to be traders. I consider them to be money managers. And when you approach your trading as a money manager, you have a much more successful ROI, return on investment, for your time. Before I jump into some of the things that I do in order to understand market flow and market sentiment, um, I believe that day trading and trading can sometimes be a recipe for disaster unless you have the stomach to go through the waves of the up and downs that the market could throw in your direction. Um, I am a big time swing trader. I am an advocate for swing trading. I am an advocate for equity trading, and I'm an advocate for taking options trades that are 4 to 6 weeks out. because it allows trades to develop rather than being stuck in a position that could be up 20% and down 50% in one day. I am anti-zero DTEs. I don't believe in them, and I hate trading ETFs. So before I bore you with any of that, I would like to say that what you're going to see on my screen might be new to you guys. If you have any questions about it, please feel free to ask in the chat, and then I can address it. As I had mentioned previously, I am a big fundamental analysis trader. I like reading. I like reading market analysis. I like creating market analysis. I like understanding sentiment, and I love understanding sector rotation and following the money. One of the tools that I personally utilize to understand where the market is, where it's going, and what it's doing is a website called FinViz. FinViz is basically your go-to for any trader that doesn't have access to a Bloomberg terminal. And the reason that I love this website is because it gives you access to getting information that you normally wouldn't have access to anywhere else. If you know about FinViz, great, but for those of you that don't know, let me just show you a little bit of how it works. Let's just say that we're looking at a ticker symbol. Let's just say Kohl's, KSS. It will give you a systematic breakdown of the actual chart. It'll give you the entire inside dynamics of the actual stock itself, but then it's also going to give you the upgrades, the downgrades, who's doing it. Most importantly, it gives you a link to every single piece of news that's come out on that particular stock or company. But even better is that it gives you the inside of institutional insider trading, right? So for example, here we see that XYZ company had some insider trading that happened, on October 3rd. So this kind of gives you an entire breakdown of what's happening within that particular company. But the great thing about this particular website is that it allows you to called groups. And groups is phenomenal because it breaks down where the money is going, where the money has been, and where the rotations are happening. So for example, you can see here that healthcare in the last month has been red, and we can see that utilities has been green. It's been the leader for the past month. The past week, utilities has continued to be green. But now, on the previous day, on Friday, we can see that basic materials took the lead, and that real estate is coming down. So what you start to see is, where is the money going? Is the money rotating out of one sector, going into the other sector? Is the money going out of technology, and is it going into consumer cyclicals, or is it going into communication services? This is a great way to understand where things are going in correlation to what I like to say market maker money movement, right? So you can utilize this to your full advantage so that you can understand which sector is getting the most hits. Great website for you guys that want to understand where you can place your money. Because, for example, if we have seen that technology was leading during the month and it was in second place, and last week technology started going down, and technology on Friday was still going down, well, who took the lead? Well, let's just go ahead and see who was leading the weekly sector. We can see that technology was slowing down, but industrials, basic materials, financial, real estate, and utilities was leading the way. Well, let's see where technology is. Well, technology on the daily performance was not a leader. It was basic materials, real estate, and communication services. Great website, great way to understand what's happening. And not only that, but let's say that, okay, you want to know what basic materials is doing. Okay, fine. What's basic materials? All you do is click on this, and it'll give you every single stock that's considered inside of the S&P to be basic material. And from here, you can start looking at what makes sense. There's some companies that you might not know that you might, be new to.
Hey,
For example,
JP, I'm so sorry. I want to cut in for a second. The cool thing you can also do, since you're on the groups thing, let's say, as you were saying, you want to see the stocks that are in a certain sector. You can use, as JP said, the FinViz, and you could click the sector to see the stocks that's in it. Just because some of these are a little bit low volume, as you can see on JP's screen on the top, you could set the filters on the top to, just showing the list down. Let's say if you wanted higher traded, volume stocks, so you can trade, for example, options. That's something you can do here because there's a lot of filters you can do. Also, if you want to keep it very simple, you can use TradingView. As you guys know, TradingView has a option where you can go onto the heat map and you can find the sector that you find on FinViz on the heat map as well, and you could click on that sector and you could see all the stocks in that. Just wanted to, just say that for a second. But yeah, go ahead.
So, for example, let's say that you're interested in Alcoa. This is a company that I traded when I was in my 20s. They're an aluminum company. Okay, it's a basic material. Click on it, boom, you got everything you need. Great website, something that you guys should use. Once again, finviz.com. That's finviz.com. One of the other things that my trading colleagues and I like to do is really focus on news. I have software that allows me to have a direct feed to the Bloomberg terminal, and I get as the data prints, I get it as fast as a Bloomberg terminal will get it. I may be by 3 seconds delay, but I get the news faster than anyone. But if you don't have access to that proprietary software, guess what? There's an incredible website called financialjuice.com. What is financialjuice.com? It's everything that you could want as a retail trader so that you have the edge. It gives you a breakdown of everything that's happening on economic data per country per day. So, for example, on October 21st, we know there's an IMF meeting all day. We have German PPI, we have the 3-month bill, we have the South Korean PPI. Everything that you need is here. So that way you can go into your week knowing what day you want to trade and what day you don't want to trade. For example, do you want to be trading Boeing this week? No, you don't. Why? Because BA is reporting earnings on the 23rd. So if you don't know that that's happening, right, and you want to get into the company, well, guess what? Before you get into that particular stock, you come over here and it tells you the most important earnings that are going to hit the press. Parker is talking. You're going to get highlights here. Obviously there's no highlights here right now because you already spoke, but here's an example. Here's a highlight from Fed Bostic. Fed Bostic rates will continue to fall if inflation declines, right? This is coming in as these individuals are talking. So you can keep an eye on everything that's happening on an economic data of economic data importance on this website. So great website, great tool to have, great information for those of you guys that are trying to perfect the craft and trying to get a little bit more knowledgeable about what it is that you should be doing, what it is that you shouldn't be doing, and most importantly, having information. Because the more information you have, guess what? The smarter you are, the wiser you are when it comes to managing your money. Before I hand this off to Kevin, I want to address something very quickly. I'm an S&P trader. I don't like trading the NASDAQ. I don't like trading the Russell. And I sure as hell try to avoid the Dow at all costs. And why do I like to trade the S&P? Well, I've had great mentors that work on Wall Street that have been head of major hedge funds and some of the biggest banking institutions in the world. And the S&P is the driver of markets. One of the things that I have become a big fan of is having a S&P tactical watch list. Well, what the hell is an S&P tactical watch list? Well, if you're looking at my screen and you're looking at my trading view, what we have here is not only the VIX and the dollar, which I like to monitor, but you have obviously the futures, the ES, you have the ETS, that's the ETF, that's a SPY, and you have the actual index itself. But within that index, right, and within inside that ETF, we have the spiders. These are all the spiders. This is the XOP. This is the XLE. This is the XRT, etc. Having an understanding of what the spiders are doing will give you a better understanding of if the market is overall bullish or bearish when it comes to the S&P. Why? Because obviously, if the amount of spiders that are green outweigh the amount of spiders that are red, it means that the S&P is going to be bullish. If it was the other way around, it means that it's going to be bearish. Obviously, things like the XLK, which is the technology spider, are more heavily weighted than, let's say, the XBI, which is the biotech. But when you start to see and understand that the spiders are giving you signals as to the directional ebbs and flows of the market, it makes life a lot easier. If you like trading SPY, or if you like trading QQQ, whatever it is that you'd like to trade, or maybe like individual stocks, I really do suggest that you guys create an S&P tactical watch list. I'm happy to share mine. Or create a NASDAQ tactical watch list. I just happen to be a psychopath and have every single NASDAQ 100 stock on a watch list, but that's just me because I have issues, but don't ask. But this is something great that I think every trader should have. Before I hand it off to Kevin, I want to address something very important. It's imperative that as a money manager or as a trader, whatever you want to call yourself, you become very good at understanding an index and what that index does and its relationship to whatever quad we're in. And there's 4 economic quads, and we can talk about that on a later time. So understanding what quad you're in and understanding what sector is moving will make your life a lot easier. So take that into consideration. Use these tools that I've provided you with. And again, hopefully that's great for you and it makes you a better trader, money manager. And that's a brief little intro on some of the things that I do alongside with Kevin in order for us to find swing trades. Kevin, I'll hand this off to you now. If there's anything else that you want me to add, by all means, let me know. If not, stream is yours.
Yeah, I'll take over, JP. Thank you again. I'll bring you on a little bit later to, go ahead and explain a few more things that I feel a little bit people will be confused about. But let me go ahead and bring my stream up. So, let's see. Okay, could you check for me, JP, if you could see my screen?
Yes, sir.
Okay, cool. All right, so first off, I hope you guys were listening to what JP was talking about, because if you guys remember, I know a lot of you do, JP is the one that told me about Siri, and I know a lot of you guys did really well in that swing. So it's always worth listening to JP. He finds these really undervalued stocks. Siri was one of them. He's the one who brought it to my attention. He's like, hey, Kevin, look at Siri. And lo and behold, Siri gapped up huge. Runners went up, I think, almost to close to 300% because the stock was up 12%, almost 12% from when we entered. So the options just went like crazy because Siri is a very low volatile option stock. So again, thank JP for that trade, not me. Everyone keeps on thanking me. No, that's JP's trade. So congrats on that trade. Thanks again, JP. But the reason why I want to also say that is because another stock that JP brought to my mind, not to my mind, but my attention, is Kohl's. And you guys saw this trade. I posted it, I believe, on Friday. I'm not sure. Yeah, on Friday itself. And not saying that this trade is just going to go to 200%. But the reason why I'm bringing this up to your attention is because it kind of seeps into what JP was talking about earlier, right? It's very important to just trade things more than just the ETFs and have a broader view of the market, because as most of you know, or most of you actually don't know, across my 11 years and across, JP's almost 2 decades of trading, one thing has become abundantly clear. traders are more consistent swing trading than day trading, and that's because when it comes to swing trading, you have time on your side, and if you do stuff correctly, like choosing the right contracts, right time, right setups, I can't say I can promise this, but majority of times in our experiences, it's worked out pretty favorable. So whether you're a fundamental trader like JP or whether you're a technical trader like me, a lot of swings can eventually work out. But what both require, when I say both, I mean fundamental trader or technical trader. What both things require is for you to find undervalued stocks, right? Because the whole reason you're trading or anything related to trading or business is to find something undervalued and take advantage of something undervalued, and ride it all the way up until it's overvalued or reaches fair value, right? So Siri was one of them. Siri was very undervalued. It had its leg up. We caught that move again thanks to JP, and I do intend to get back into Siri contracts, but maybe because I see Siri reaching eventually $29.46 and $33.95, but maybe we would want a retracement back to a previous resistant that's going to turn into support. So maybe down at 25.62. If it tests down there, then maybe I would get back into Siri calls, right? And then we could, if anybody knows, again, we have a video on our YouTube channel. If anyone knows Elliott impulse waves, the way usually market moves work is in a series of impulse waves, and it's called the 1 to 5 wave. So usually you have the first wave, you have a correction, then the second wave, right, which is the strongest one, and then a correction, and then the last wave. And you always want to try to get into the second wave. So first wave is usually, just to give a little background, first wave is usually run by institutions and some retail traders. This cool off is obviously, institutions selling off, institutions buy here, but also this is where retail traders get in. So this is why the momentum is big, because you have two sides on the same, sentiment, and it ends up moving very strong to the upside. So that's what I intend to do with Siri. And moving away from Siri, as I was saying, the other stock that JP brought to my attention was Kohl's. And as I'll go to the monthly chart very quickly, you can see that Kohl's is first of all, it's a very rangy kind of stock, right? We're looking all the way back in 1999. It's kind of been around the same kind of area, past 24 years, right? So we're kind of a little bit low, down to the bottom of the range. And if we go to the weekly, you'll see that we've been in this very big range, right? All the way since 2022. And we're kind of at the bottom. And usually the way ranges work, as you guys know, you trade from the bottom range to the top of the range. So there is a possibility, that's what we're trading here. We're trading on the possibility that Kohl's will go from the bottom of the range to the top of the range. In fact, as one thing that JP brought to my attention, the reason why a lot of retail stores, if you guys remember from last Saturday tickers, what we talked about, a lot of retail, the whole retail sector is getting a lot of momentum, is because it's obviously reaching holiday season, and when holiday season comes around, there's obviously a lot more spending, businesses get more customers, more revenue, so their value goes up, right? So usually you see, the end of the year being a rally, or a bullish sentiment for a lot of stocks. And Kohl's is something that's not, shy away from that reality. So you could see, back in the previous years, you'd usually have a lot of bullish sentiment near the end of the year. Now, again, that doesn't mean it's going to go up 150%, but we have possibility on our side since we're using historical fundamental analysis and price, technical analysis, right? So what do I like about Kohl's? Well, you could see here, first of all, on the weekly chart, as you guys know, I'm a price action trader. That's my primary way of trading. Very simple without being too intricate. You could see that we've held support, right? It doesn't matter where you put the level. You could put it at 1866. You could put it all the way down at 1803. It does not matter. As long as you could see around this area, right? And I'll just draw a rectangle so you can see it. Around this area, we've maintained support. So what that represents, right, is that buyers are able to push the price up in this area, and the sellers are not strong enough to push it down. We could also see the sizes of the wicks, which represent the strength of the buyers, which is pretty strong to the upside. So, moving away from the weekly chart, if you go to the daily chart, you could see that, you could see here, from the previous daily candles all the way from Friday last week, you've had a lot of like these weird bullish candles. For those who've actually traded with me or traded with JP on our VC, you guys have noticed that I personally don't like candles like this, because what this represents is that, yeah, there's buyers present, but the amount of sellers there's just no sellers. So it doesn't mean like okay, let me put it simple. There's a difference between being a huge amount of buyers and the buyers just being strong versus, just there being buyers and there's no presence of sellers at all. You know what that means? That just means that eventually sellers will step in, versus the first scenario, it means that the sellers are there, but the buyers are overpowering the sellers. So that's what we kind of got in the Friday candle and in the Tuesday candle, right? But Wednesday came along, very rangy, Thursday as well. But then Friday came along and we had a very strong bullish candle. And what I'm aiming for here is, you can see, no matter how you draw this trend line, because it's not so important about getting the most perfect trend line, but if you connect the resistance areas, right, however you draw it, you could see the oldest trend line, which is like this. We've already broke above it. In fact, the previous daily candles used this as support and bounced off of it. Now, if you want to have the newer trend line, you could do this one, right? And you could see we just slightly broke above it. So JP and I entered these calls on Friday. There might be a little pullback on Monday. Not saying it will happen, not saying it won't. There could be a pullback on Monday, but I do think overall, I personally, my opinion is that Coles stays above 2036, and whether it be Monday or Tuesday, I think we test the upside. I personally, as you guys know, I hold a lot of runners in my trades. That's what grew my account over the years. It's learning how to hold your runners. That's again another topic that I've talked about on our YouTube channel. Or, you could clearly see it in the post, the trade ideas that I post, how I hold my runners. And again, I have the how I trade document. So like read that, because I don't know how many people give out free information. That's literally free information. So read that. But so what I'm planning here is JP and I we're trying to test at least a push up to maybe $24. Since I believe we got, correct me if I'm wrong, JP, I think we got the November 8th or November 15th contracts. Am I correct?
November 8th, 2150s.
Yeah, so we got the November 8th. We kind of got close to in the money, because 2150 is like right over here. So what we're both expecting is at least maybe a move up to 2309. Since Coles is a very low volatile stock, again, as I said before, when low volatile stocks get a lot of movement and very strong movements, the contracts gain a significant amount of value, and that's what we saw with Siri, right? Because Siri, if you guys remember, that was a November 15th contract. The fact that we got more than 100, we got almost close to 300% on a November 15th contract is insane. Like, keep that in mind. Usually that is percentages you find in the same week expiration contracts. So if Coles were to move our way, we would utilize the fact that the IV on a stock such as Coles is very low. So once the IV ramps up, because this price action is very strong, these contracts, by the time they reach, let's say $23, they might already be reaching 80%, let's just say passively 60% or 80%, which is, realistically a really good profit percentage. From there, what I would typically do, if you guys have already seen my how I trade document, I usually trim most of my position around 30 or 40%, and I leave runners, and then eventually around 60 or 80% I leave something called risk-free runners, which means the remainder of contracts I leave over, even if they were to theoretically go to zero, it's not going to affect the profits that I had beforehand. So that's my whole thing here. We wanted to go around $23. Best case scenario, it retraces to this fib level here, which is 29.76. Theoretically, if it were to reach all the way up to 29.76, the contracts will be very deep in the money, and they would be potentially 800% or 900% since it's a low volatile stock. Will that happen? Can't promise that, but this is something to keep your eye on for those who got in the Coles trade, just to let you know. I'm going to go over a few tickers before we head into stocks that you guys want me to look at. I know Verizon is a swing that we have been in for, I think, since almost the beginning of the week or midweek. And it's a little bit annoying because I kind of got not a great entry. I wish I got the entry on Monday, and we would be actually up on our contracts a decent amount. But we entered actually on Tuesday, I believe, and the contracts only reached like 15% profit. So it's not working as quickly as I hoped it, even though we got time on it. But the whole reason why I got this is because, and I'll show this really quickly. You can see here on the weekly chart for Verizon, we're very bullish, right? As you can see, I can literally remove my drawings and I'll make it very simple for you. An easy way to trade or to look at any stocks is to find supports or resistances that's broken, like price has broken past recently, and if it's maintained it. So what I mean is, okay, if we look at this chart of Verizon, we could see that back here in 2020, we had a support around 41.19, right? We bounced off that support a few times in the past, over here as well. We eventually broke below it. We came up, we rejected it multiple times, but the past few weeks, ever since September, as you can see, we broke above it. So since we were breaking above this is going to be confusing to say, but since we broke past a support that turned into resistance, that's now turned back into a support, that's a very strong bullish sentiment, right? So either two things can happen here, right? Either we have a continued path to the upside, or what we have is a test to this support, right? Resistance turned into support, and a bounce off of there. Since earnings, as you can see, are actually coming up on Tuesday, I was aiming for the fact that Verizon does beat earnings. Again, I'm not a huge fundamental trader, so I don't know exactly if it will beat earnings, but the probability was, since the sentiment is already bullish on Verizon and we broke through a very strong resistance, if Verizon were to beat its earnings, the stock can possibly test near $45 or something like that. So that's what I was looking at Verizon, because I know a few guys are in the trade, and I know someone asked it before on the Ask the Bishop chat. And again, you guys can, whatever tickers you want me to look at or JP to look at, you can feel free to put the Ask the Bishop chat, which is right below the main chat. I said chat too many times in that sentence. One thing I want to bring to your attention. A lot of people were confused about why I took Baidu. Well, the reason I took Baidu is because it's a Chinese stock. And a few Chinese stocks you want to be looking at is Baba, Baidu, and what's the other one? NIO. And the reason why I would say it's okay to look at them is because, what's it called? When Trump won presidency, when was it, 2020 and 2021, there was a huge surge in Chinese stocks. I'm not saying it's guaranteed to happen again, but let's say if Trump did win presidency, we could have a possibility for that working out to the upside. So you could actually see here, we had this huge, you could call this a short squeeze, and we actually got Baidu and Baba trade on, during the short squeeze, and the contracts went ballistic. And the reason why that happened, one, because Trump was receiving a lot of confidence in his whole candidacy run, and also on top of that, if you guys actually saw, there was Chinese news about a stimulus that was coming out. So once the stimulus came out, Baidu, Baba, and NIO saw substantial gains, especially Baidu and Baba, because I'll show you really quickly. Like if you compare the, what's it called? If you compare the Baidu weekly chart to Baba weekly chart, let me remove all of these and scroll out. You could see that Baba compared to Baidu, like Baba has had a little bit more strength versus Baidu, right? Baidu has just been a strong climb to the downside, versus Baba is a little bit, is ranging, but it's also had a little bit of upside. So as I said before, you always want to find the undervalued stocks and go with that. So that's why I personally got into the Baidu calls. I believe they were the 120 strike for November 15th or something like that. So we have time. They're currently down right now. But we did see, because I entered on Tuesday, right? Tuesday we had a little bit of green on those contracts. Thursday the price came down. But then again on Friday we saw a resurgence in Baidu. And something JP wanted me to mention is, sorry, I was taking in a sip of water. But something JP wanted me to mention is Chinese are trying to stimulate their economy, right? So they're injecting capital into their economy. That's why the stimulus came out. And he wanted me to say that their housing market, yeah, they're injecting capital into the stock market and the housing market. So this is an example of how economic data can help you catch profitable trades, because you're tying in not only technical analysis but also fundamental analysis. So keep that in mind. So this is a mix of both. So this is just what I'm looking at Baidu. I want the contracts. I want Baidu to reach 102, and our contract should be actually very decently profitable if it reaches up to this range. So yeah, another trade I wanted to go into before I reach the tickers that you guys are posting is DLTR. DLTR is Dollar Tree. This is a little bit similar sentiment as Kohl's. This was a setup I found that I really like, because on the weekly chart you could see we have a potential double bottom, and you could see there was a lot of, even though it was downside, it was like very slow consolidation kind of downside. So so yeah, that's why I got into Dollar Tree. I wanted to break out of this. I'll just draw the top trend line over here, and you could see it's it's a bearish channel, right? So I wanted to break out of the channel, eventually test 81.66, but passively I do want it to test at least this resistance over here at 72.63, which should give us around 40 to 50% on the contracts that we have. But yeah, I know JP wanted to chime in about something. Do you want me to chime in now, or you want to come in later?
You can do it now.
Okay, what were you gonna say?
Kevin, do me a favor. Look at MSOS. I wanted to bring this up really quick because we talked about the importance of finding tickers that have that are making moves and that can potentially have a catalyst. When we looked at Siri, we detected some bullish sweepers coming into the options chains, which I found very suspicious. That was about 3, 4 days prior to me notifying you that I wanted to take a position. It was funny that a couple of days later, that we did take that position, and the day that we did take that position, it was announced that Warren Buffett bought $87 million worth of shares, right?
Yeah.
It just happened to be perfect timing. Those are the things that you just, when they happen, you just sit there and thank God because you couldn't ask for a better setup. But I do want to share something with you guys about stuff that Kevin and I like to do, and that is understanding catalysts and how they can affect a potential trade. As some of you may or may not know, MSOS is the cannabis ETF that is currently trading with a lot of volume. The reason that I had addressed this particular ticker symbol was because despite it being a speculative trade, there is a very important decision that's being made in Florida on election day, which is Amendment 4. And Amendment 4, I just want to confirm that I'm saying the right thing because I confuse sometimes Amendment 4 with Amendment 3. And I believe it's Amendment 3. I'm so sorry. Amendment 3, which will allow the legalization of marijuana in Florida. If that happens, multiple dispensaries such as Trulieve, Curaleaf, Terra, Green Dragon, all of these major dispensaries that are publicly traded are going to have an influx of money come into their stocks because it's going to not only generate incredible amounts of revenue, but you have to remember that most of these companies, not only are they in the distribution of the retail market of cannabis, but they're also in the real estate game. And what do? They buy land. So not only are they going to have money based on revenue from sales, but they're also going to have money from their assets. So taking a speculative trade like this is something that I like to discuss because here's a perfect example. If Amendment 3 is to get passed and we get an we get a an incredible roar inside of the cannabis community, this ETF is going to fly. I always find it funny that whenever there's a major catalyst, that particular stock is set up either for a perfect breakout or for a perfect collapse. In my opinion, the market already knows that Amendment 3 is going to be passed, which is why people are piling into this, or for that matter, there is a bullish sentiment on that it will get passed. When you look at this trade from a fundamental perspective with a positive catalyst and the effects that it could have, they're phenomenal. But when you look at it from a technical perspective, which is why now I'm going to hand this back to Kevin, you can see that there's a fundamental trade here with a catalyst and a technical setup. So these are kind of the things that Kevin and I like to look for when we're trading things that are a little bit more high risk but big reward. So Kevin, from your, because you're a much better technical analysis guy than I am, can you break this trade down?
Yeah, I've actually, I'll be honest, I've never personally traded MSOS before, but I mean, looking at it, one thing, one thing you also want to look at swings, obviously, is the weekly chart, and you could see here that we did have a sharp movement to the downside. So weekly chart is a little bit iffy, but you could see, as we talked about, in the previous tickers, it is holding support, right? So we have had recent attempts at breaking support. We did have two successful attempts, but we could see recently, the past 3 weeks, we've held above support. And once we go to the daily chart, we can see that the trend line you can draw here on the daily, we've actually broken above that. So what this indicates is there's a lot more possibility for the bullish sentiment, as JP was saying. So this is where the fundamental analysis and technical analysis kind of tie in, because again, you could have a few possibility here. Obviously, God forbid, there's the downside possibility, and then there's, of course, the possibility where you just go right up. But, the more likely possibility that could come out, or the safest way you could trade this, is you can wait for it to come down, test this trend line or the support, and then try to trade off of a bounce off of that, right? Because when you wait for confirmations, when you wait for a trade that has confirmations, like testing this trend line and bouncing off of it, you can easily kind of, like place your stops and stuff like that. Like, for example, if let's say on Monday, let's say the candle, let's say MSOS opens exactly, right here at break even. What you can do here is, if you entered, you have the possibility of it coming down already to the trend line, right? So why risk that downside? Yes, of course, you're risking the fact that you might miss it. But again, risk management, risk tolerance, that's something you have to always figure out. But I definitely like this trade, JP. Looking at the fundamental analysis, we are, as you mentioned, it's something really worth considering. As I've always stated in the past, I'm a huge believer in price. I believe price always tells the story, similar to fundamental analysis. I know a lot of people don't have an eye for price action, but I definitely do, and I could say that a lot of times before news events, the daily candles, 2-hour candles, 30-minute candles, they kind of show beforehand what exactly is gonna happen. Not all of the time, but there's definitely a lot of instances where it does, right? And you could see here that we've broken above the trend line. So what this could possibly indicate, as JP said, correct me if I'm wrong, the Amendment 3 that could be possibly passed is most likely going to happen. So this is definitely a ticker I'll be looking at. I can put on my watch list. If I did see this on Friday, I wish if I saw this on Thursday, I definitely would have entered. Now that I had this kind of weird candle on Friday, maybe I would have had on my watch list, but it's something I'll definitely look out for. You guys, since you already have access to my channels, you'll see if I entered it or not. But this is a good idea, JP. Thanks for bringing it up. Let's see. I think what I'm going to do. Okay, the last one I'm going to go over is XOM. Then I'm going to go into the tickers you guys requested. XOM is very simple. I'm not a huge oil guy. Don't trade oil. JP does. I don't. But very simple here. This is a whole price action trade. There's a fact that there's just been a resistance, right? Up at 19, around 119.34. We broke above it. You can see there's a strong resistance since we've kept on, rejecting this area. And again, it's not always important to have the pinpoint level. It's just important to have the approximate area where activity is happening, right? So it's 119.34. It could be 118.80. Again, does not matter in swing trading. It's just as long as you have the approximate area, that's what matters the most. So since we're looking at that area, you could see that we've had consolidation near here. And as you guys may or may not know, I'm a huge guy into reading the wicks. And the wicks, the wick over here, again, forgive my English because English is not my first language and I suck at it. But you can see we have a big wick to the downside, which represents that the buyers were able to push up the price all the way down from 119.34 around there all the way back up to 120. So it shows a significant amount of buyers. This is a risky trade because XOM is a little bit more news driven than anything, right? Especially between the possible war with Iran and Israel. Israel can go after Iran's oil supplies, so on and so forth. People say it is directly correlated with XOM and other oil stocks. Some people says it doesn't. I'm not the person to really ask about that, but that's a risk to it because it is somewhat news oriented, but it also does follow price action when there's no news coming out. So this is a falling wedge that I'm looking at. That's why I took the set of calls on Friday. So I want to at least trade it up to 121.89 and then leave runners to test up to 123.78. So now what we'll do is we'll go over the tickers and then we'll go over the questions you guys might have because it's already been 50 minutes that we've been doing this. So as you guys can see, there's the main chat and the Ask Bishop channel. Feel free to go ahead to the Ask Bishop channel and feel free to put tickers you want either JP or I to look at or questions you might have related to trading, and we'll try to get to as much of that as we can in the allotted time. But to start off, again, what I'll do is I'll go over the tickers first and then I'll go over the questions. So the ticker that I was asked to go over was CL and PFE. Then we'll go into STLA and then EA. So CCL and PFE are trades I'm currently in. Very simple. We've had a really strong movement on CCL. As you guys know, CCL is Carnival Cruise Lines. You guys might know its cousin RCL, which stands for Royal Caribbean Cruise Lines. As you can see, Royal Caribbean Cruise Lines has been very strong, but for those who's been on Carnival Cruise Lines versus Royal Caribbean Cruise Lines, obviously Royal's a little bit better, so their revenue is better, and the cruise is better, so obviously their company's performing better. But again, tying back, you always want to go for the undervalued asset in a sector that's performing well. So what we have here is we have this weird area where we've seen a lot of bounces and hesitation and rejections. We've broken above that, and what this trade is basically, the reason why I got into it is I want to see if we can hold above this range and then eventually test the upside. So we can see here on Friday, again, we had a good day, but not good day, but since we gapped down, contracts are currently down, I believe, 40%. Monday, if it breaks below 2104, I will be getting out of these. But since Friday did have a very strong push to the upside, even though it did have a push to the downside, I believe there's still a possibility for the upside. So it's not more of a hope trade. There is technical analysis behind this, but it is a little bit risky because we're getting at a high point versus a low point, right? A low point is like somewhere down here. And we did actually, if you guys remember, I did get in a CCL trade, I believe like last week or 2 weeks ago. That's up already like 800%. So congrats on anybody who got into that. The next trade that I was asked was PFE. PFE, again, very simple trade. We've been in this range ever since beginning of August 5th, right? So we've we kind of broke out of this range. We're testing it back again, and we're back in this mid zone. For anyone who does not know what mid zone is, mid zone, and I'll just redraw the range over here so you guys can easily see what I'm looking at. But the mid zone is basically the middle of the range, and the middle of the range always has a lot of activity because it's where the hesitation occurs. So we could see that we have a lot of hesitation here, and what you have is a potential inverse head and shoulders, right? Because you've got the sorry for my dog, by the way. Let me get the brush. You could see we have the shoulders, neckline, and then the possible right shoulder. It's not beautiful, but it's there, right? If you don't want to call it inverse head and shoulders, you can call it a triple bottom. I don't care. Pattern names don't really matter as long as it makes sense to you. It's something I've learned. So you can see last time we've had a candle like this, right? We've had this huge push up by Pfizer. Granted, I believe this was because of news, but you could see again, once we had a very strong wick to the downside, we've had another push on PFE. So that's what I'm aiming for. I believe we got these on Wednesday, the PFE calls. So I want to see a push up to $30 for PFE. Now, the next ticker I want that was requested was STLA. So I'm gonna go to that. I've personally not traded Stellantis before, but just looking at this is, I don't know how other options works, but I guess this would be more of a shares play. Still, again, as we talked about before, you always want to look at areas where it's been a past, resistance that turned into support, and then you're testing it again, and that's exactly what's happening here. A few of you guys may know, if you traded with me, I'm a huge fan of one of the oldest patterns out there, and it's called the ascending scallop, right? Whatever term you want to call it. And basically, it's where price curves into the upside. So we're seeing a possibility of that. We have a huge gap up here on from Thursday to Friday, which is pretty strong. And on top of that, even though we have a very small range here on Friday, we do have a very bullish candle. Because again, we have a strong wick to the downside, and we're closing, bullish. So if I were to trade this, again, I'm not in this trade. This was a requested ticker. As you can see, the weekly is pretty nice as well. So if I were to trade this, again, I'm a huge fib guy, so I'll be looking at, obviously, aiming for 1841 is something you could theoretically do with shares. If you had options, the passive target would be testing the previous high, which is 1406, or you could try aiming for runners to test the gap fill or close to the gap fill, which is 1497. If you break past both of these areas, and I'm going to add this to my watch list because I actually like this a lot, if you break both of these areas, you could see a massive potential push to the upside. So definitely keep an eye on this. Again, I've never traded Stellantis, so always, no matter what we say here, there's not financial advice. Always look at your own trades and always do your own due diligence. Or as the weird people say, DD. I don't know why people say DD. It sounds very childish. But anyway, that's away from the point. I don't know why I'm ranting about that. So EA, what a terrible gaming company, but it has a stock, so why not trade it? You could see here on the weekly, we could easily, first thing you want to do, find the most recent high, plot that, right? You could see that the most recent high, not the recent high, but the previous high was all the way back in 2018, back when Madden games were actually good, and you could see it was 147.73. So we tried breaking above that, we rejected it, and we tested it again this week, but you could see here on the weekly, we kind of rejected it and have a very strong wick to the upside instead of the downside. So this does seem a little bit bearish. Do keep in mind, as JP was saying earlier, JP wanted me to mention, there is the whole fact that it's holiday season. So there is the possibility for it to push to the upside because of, additional sales, because people are buying games for their kids or buying games for themselves, whatsoever. But just keep an eye on the weekly chart. You do want to keep an eye on price. We did reject this level, 147.73. But if you do have a very strong gap up, especially if you have a push above this level, 147.73, then you could possibly say it's bullish. I personally won't take calls on this trade just because it's not something I personally like. But again, I'm not always correct. If you like it, feel free to do whatever you would like.
I want to
Um,
chime in on EA
yeah.
really quick. So EA is a company that I have constantly on my watch list, and it's something that I monitor very closely. The reason I do so is because it's not a recession-proof company. One of the things that happens, and I know this because I'm an old fart and I've seen it happen. Um, when the pockets get tight, the first thing that families will do is find unnecessary expenses. And an unnecessary expense is a new video game. An unnecessary expense is a new gaming console. An unnecessary expense is, uh, you know, buying the limited edition PlayStation, you know, from Metal Gear Solid. I love Metal Gear. Um, so, despite the fact that we are going into holidays, you have to think about where the world is at or where the economy's at in comparison to the cost of a video game. What I mean by that is very simple. You have to think about if I'm going to be long EA Sports or if I'm going to be long a gaming company, I am therefore saying that currently the American economy is foolproof, inflation has not affected anybody, and that spending $100 on a game is money that can be spent uh, for recreational purpose rather than going to the supermarket. I personally don't believe that that is the case. I think EA, again, this is just my opinion, might report good earnings because they do have an incredible following in FIFA, but I don't believe that they're going to give positive forward guidance. If I was to trade a gaming company, I'd rather trade the technology behind the gaming company on a ticker symbol like Unity, which is ticker symbol U. So keep that in mind for whoever is trading EA, whoever that person is. Before you get into this trade, think about the overall aspect of where you're at in the world. Do you think that EA going into next year is going to report better guidance or worse guidance? That's all I have to say about that because the gaming sector is something that I watch heavily alongside with cybersecurity. So, yeah.
Oh, such you. I never. It's like, this is why the this is why the pairing of JP and I is pretty good because I met JP like what 2 3 years ago, and the funny thing is, you guys know I'm not trying to boast, but I'm really good at reading price, and I've never looked at fundamental analysis or even cared about the news or economic events. And I remember I told that to JP when I first met him, and that guy was just blown away. And he called me. I think he said that was the most dumbest and craziest thing he has ever heard. But I've learned a lot of things with JP, and that's yes, people need to understand like you could have 11 years in the market, but there's still something new you learn every day. There's still stuff JP's learning, and he's been on trading for a longer time than me.
Since the
So
dinosaurs.
yeah, since the dinosaurs, right? So. That's why, like, it's always nice to learn things. And JP has a really great point that I didn't even consider, right? He said that instead of focusing on companies like EA, and just to let you know, JP, the person who asked for EA was actually an EA put. So, but anyway, when it comes to an interesting point he said is instead of focusing on companies like EA, you want to focus on the companies that actually produce or have the software behind it. And I'm actually really glad you said that, JP, because that is something really nice to focus on. Because you could see here, as JP said, Unity,
Up
which is
and handle.
a software company, you have a possible cup and handle forming here. And I wish I saw this because I kid you not, I cannot tell you how many times my man JP here has been saying, Unity, 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 and I never looked at it. But of course, the one time he tells me, now I feel like an idiot for not looking at it beforehand. But Unity does have a really a great setup here. all right? Because you had a very, very, very historic support back in 2022 that we are closing above on 3 consecutive weeks, right? Granted, the most recent weekly candle is iffy, but when you go to a daily candle, you see that we're testing the top of the trend line right over here. So I believe this would be a good options trade, also a shares trade as well, because again, this is a very undervalued stock. Holiday seasons are coming up. JP said, you don't want to focus on companies like EA. You might want to focus on the companies that are the software companies. So if I had to get into this trade, and if I did get into this trade on Friday, I would have been trying to aim for the 25.17 mark and then eventually higher. But this is a nice cup and handle formation. But good eye, JP. It was pretty nice.
We broke out of a daily pennant as well that I was watching.
Yeah, you're talking about this one.
The Penante? Yes, the Penante.
Yeah.
It's very you can see it very clearly on a line chart. And we'll talk about a line chart after we're done with the tickers.
Yeah, sure. Cool. All right. Hold on 1 second. So since we're wrapping up tickers, feel free to post questions in the Ask Bishop thing. We'll go over that, and then we'll end up wrapping up the call within some time or so. So if you guys have any questions related to trading or anything in general, we can go over that. We'll answer it to the best of our ability. Again, we're not financial advisors. But I believe you have 1 question or 2 questions, so I'll go over that in just a second. And this could be not just a question for me. This could be a question for JP. So if you want to learn more about like sector analysis or fundamental analysis, he's definitely the person to ask. Okay. So the first question we had was actually asked by Betty, and it's a very frequent question that a lot of people ask. And basically, Betty asked, she had a question about position size management. And she asked, when you do a swing trade, do you put a percentage of your portfolio or a set dollar amount? When I have a large number of contracts and it's down 30 or 50% at open, I have the urge to close it whenever it rises. When I only have one or two cons, I don't feel that, but I will be out of the position after the initial trims. Okay, so that question is always going to be a very intricate question to answer, right? Because it ties in multiple factors. Of course, there's the whole thing about having a good solid plan, right? But then there's also the fact that you have to also kind of tie in your risk management. And the way you figure out your risk management is by figuring out your financial situation. Again, I have videos that talk about, different problems and account growth and stuff like that. So definitely look at the YouTube channel for that, because I don't want to but I don't want to go over stuff that's already available. But so it's very, very, let me put it very basic. People look at trading as a way to grow, as a way to get money quick. But in reality, as JP said in the beginning, you shouldn't be trading to get money quick. You want to be trading so you could, I always say you want to trade so you could grow your account and get wealthy instead of trading to get rich, because there's a huge difference between the two. And that ties into something that JP said earlier, right? You want to, instead of classifying yourself as a trader, you need to classify yourself as a money manager. Because if you have a solid grasp of how to manage your money and to allocate a percentage of portfolios into each trade, you can minimize or mitigate the amount of risk you have against your portfolio, right? Because what's the point of trading? Like I keep saying this, I don't get why people get into trading to, let's say, for multiple reasons, whether they want to get out of a stressful financial situation, whether they just want to quit their 9-to-5 job, or whether they want to have trading as a stress-free income source, right, as their main income source. Why would you put yourself in stressful situations? Stressful situations are things such as trading zero DTEs constantly, especially ETFs such as QQQs and SPY, right? Or it could be oversizing. Like, what's the point of putting yourself in stressful situations, like trading lottery ticket trades, zero DTE ETFs, or or is oversizing and being stressed out about that if the whole reason you're trading is to get out of the whole stressful situation, right? So keep that in mind. But to answer that question, usually the whole saying, or the whole like usual rule is, you don't want to go more than like 5% of your portfolio. Obviously, the bigger portfolio you have, the more opportunity you have. That's just the truth. If you have a smaller portfolio, then probably, unfortunately, the truth is you would have to go with a lot bigger percentage of your portfolio, right? Instead of maybe 5%, you might consider like 10 or 20%. 20% is kind of risking a lot, because God forbid if that trade were to go against you, you're looking at, worst case scenario, almost 20% of your portfolio gone. And remember, that is your hard-earned money. So let's say for example, I had a 10K account. You might ask, Kevin, what would you do? Okay, well, what I would do is, if I had a 10K account, and let's say I was only a swing trader, I would maybe go and put only $300 into a position, right? $300, let me pull up the calculator here really quickly. I don't want to drag this part on too long. $300 of $10,000 is 3% of your portfolio. But even though it's just 3%, the second that if the trade were to go with you, like, you could trim around 30 or 40%, right? I'm just giving a hypothetical scenario. You could trim majority at 30, 40%, and you can leave a runner, right? And that runner, you can let it go to zero. You can let it, you could exit at 80%, 100%, whatever way you want. But you want to always keep the percentage of the portfolio that you put into a trade very low, because you want to make sure you're not too cocky about the trades you get into. There's no such thing as a perfect trader. Even though I'm extremely consistent, I still have losing trades. And the reason why I have beaten the market for 11 years, and the reason why I've been on Discord longer than almost every other trader on here, because almost every other trader on here is just fake, right? Is because I'm consistent, I'm smart, I don't just blindly put money into a trade. I always put a certain amount of money, whether it's a percentage or a set dollar amount, as Betty asked. That is, again, something you have to consider based on your financial situation. You need to think before you go into each trade. You're like, hey, if I were to, God forbid, lose the entire amount I'm putting in this trade, is this going to hurt me financially? Is this going to set me back in my life? And if the answer is yes, then you got to scale back. That's just the truth, right? Again, before we go on to the next question, hopefully that answered your question, because I gave a really good example with the $10,000 account. You could refer to the How I Trade document on my bot. That gives another example as well. But another thing I wanted to discuss is, a lot of people ask when they need to hold the runners. And I will never answer that with a clear answer, because that is something you need to figure out. The easiest answer is, you can look at the chart and see how much longer your trade could potentially go. But the most complicated and the most beneficial question you can ask yourself, right? Not me, not you asking me, but yourself, is, how much are you willing to let your losers run? If you are letting your losers run to 60% or 80% and you have no risk management, then you best believe just trimming at 10 or exiting at 20% is not going to get your account anywhere. Because if your losers significantly outweigh your winners, you might as well just give your money to charity, because it's not going anywhere, right? So again, the question you need to ask yourself is, hey, how much am I willing to let my trade go to the downside? Whether you're looking at a stock, right? If you guys know me, I don't go by percentage loss. I go by if the stock is invalidated, like the setup I'm looking at, right? So if, let's say, I got into Unity, and for example, if Unity were to close on, let's say, Monday below 21.32, I'm out of it, because the support I'm looking at is invalidated. I'm out of it, right? But if it's up, then I would want it to test, let's say, I'm just giving this scenario. I just wanted to test 23.22, so I'll hold majority of my runners there, right? If I look at a percentage loss, let's say I was in Unity again, and let's say Monday gap down and the contracts are down 30%, and I usually let my runners only run to 60%, I would personally only hold it to 30% loss, and that's what I'll get out. but that's what I would do in my personal situation. That's always what is a question you want to ask yourself. But okay, so the next question. Sorry, you're gonna say JP?
Yeah, do me a favor and skip the price action question because I want to talk about that before we wrap up and go to the next question because I want to talk about price action and how important it is. And I think we wrap it up with that.
Yeah. So the next question is asked by JPat over here, and he asked me, when choosing your strike and date of expiry, what are the biggest factors you look at? Do I look at the Greeks, the volume, etc.? That's a very good, great question. And here's
Very
the
great question.
yeah, uh, and it's a very it's somewhat of a very important question to ask, especially when you're swing trading, right? When you're day trading, it's a little bit different. Obviously, day trading is very simple. You don't want to go too far out of the money because then data is going to work really against you, because you're usually choosing the same week expirations. But when you go to swing trading, it becomes a lot more lenient, right? Because when you're in swing trading, you get to put a lot of time on your trades, and there's a lot more factors you can decide on. I'll tell you what I personally look at. Usually, when I get into swing trades, if I'm really confident, I go like, I don't like going the same week, but I would go like the same week or the next week. And if I'm still confident in the trade, but I want to let my runners run, let's say, for example, I'm really bullish on Unity and I did get into this trade, I would go, instead of the 1 week or 2 weeks, I like letting my trades, go. As you guys have seen my recaps, I have a lot of big percentages, right? Reason is because I hold my contracts with time. So instead of getting it the same week or next week, I would probably get 3 weeks away. So that would be, what is that, November 8th, November 15th? I think that's November 15th. So, yeah, so I like to get time. And then the next question is, the strike, right? So personally, I like going for strikes that end with 5 or 0. Those usually have a lot of liquidity or volume around it, meaning it's going to be very easy for me to enter and exit into that contract. When it comes to very highly traded stocks, let's say Nvidia or Meta or whatever, right? Like you guys already know the highly traded stocks. Volume and the strike, it doesn't really matter so much to me. I know a lot of people have different preferences. When it comes to stocks that are traded like very frequently, let's just say like Nvidia, then, or let's say even like let's go to Pfizer, right? Pfizer is traded a lot, so the contracts are very liquid. So if I'm trading Pfizer, I'm not just going for, let's say, the $30 call, because if I see potentially Pfizer going to $31, I might get the $31 call. So that's how it works for me. But if you're trading low liquidity stocks such as, let's say, Dollar Tree, Kohl's, Siri, and stuff like that, that's when factors such as volume and the other Greeks come into play for me personally. JP, did you want to say what you usually look at, or no?
No, someone asked an important question. They
Wait.
asked,
I want to go in order, so I'll go to the next question if you don't mind.
oh, I thought that I didn't know there was another question. Okay, go ahead.
Yeah. So the next question was, when you make, I'll bring up the screen. When you make your option trade, you immediately make a stop loss, take profit sets. Oh, this is a good question. Okay, so I'm not gonna go over the runners thing because we kind of already went over that. Again, I look at just the stock price and the setup. But he's basically asking, when I enter a trade, do I set my trims or do I set my stop loss right away? I do not set stop losses right away. I personally don't use hard stop losses. Again, I go by by setup and validation. So if the setup I'm looking at gets invalidated, then I'll personally exit the trade. But it is the opposite for the trims. I always set my trims right away after I enter. I always set limit orders for, again, you guys could refer to the How I Trade document. It's available on my bot. 10% I set my trim, 20%, 30%, 40%, and then my next trim would be at like 60%, 80%, 100%. Majority, as I said, of my position is gone by 30 or 40%, just so because most trades on average usually hit around 40 to 50%. Even though if you were to look at my recap, and I'll bring that up very quickly, because again, it's always based on personal, like how you trade, right? So you could see my like for October, currently my average options trade is 197%, right? That doesn't mean every single trade is going to go up there, right? But based on my past experience, I'm going to hold my runners a little bit longer. If you're this is why it's good to keep a log. If your trades are going to usually like 60%, then maybe like if that was me, I would usually trim around 20 or 30%. But hopefully that answers that question. So the next question we had, I'm gonna read over this. If I already answered this, I'm gonna skip this real quick. If you take 10 cons, how would you scale out of those 10 cons over a trade into your runners? Meaning how many? Unfortunately, I'm not going to. Yeah, this I already discussed this, and also this is also there's. Again, if you go to my bot, right? I'll show you my bot. If you go to my bot, there is a how I trade link. Just click that. I'll bring you up to this document right over here. Ignore all these. This is just suggestions. But if you scroll down, you'll see I talk about my position sizing and so on. So a lot of those questions actually could be answered looking at that. So next questions. Can't answer that. If you're asking about advice, I can't give you advice. Okay, yeah, JP, you were saying you had a question you want to go over?
Yeah. So I wanted to skip right through into the question that someone was asking about how do you read price action? Um, and I want to, it's how do you read price action? I believe it's
As far
as
as
per
candles by
far
Bloodhound,
as
yeah.
candles. Okay, so I want you to answer the as far as candles question, and then after that, I'm going to stream my my whatever the hell Jesus, I can't speak. I'm going to stream my application and I'm going to show people level 2 and time and sales so they see how price action actually does work on a tick by tick basis. And then we can just wrap it up there. Cool?
Yeah, sure. And it's clearly you could see how old JP is since he said application. I mean, who uses that word, right? But anyway, um, so price action for me, and again, I hold one-on-ones, and the fact that I'm saying this is what I talk about in my one-on-ones, so I'll just say for free because who cares? Um, Everyone has the conception that the most important thing to look at a candle is the body, but that is, in my opinion, very untrue. I think the most important thing to look at on a candle is the wicks, and I cannot stress this how important it is to me and my trading style. Everyone has different opinions. I'm telling you mine, right? What the body of the candle represents is the sentiment and how strong the active traders were, right? This is kind of like the current visualization for me. But when it comes to the wicks, it shows the strength of the sentiment. If, for example, I were to have a candle like this, right? What this represents is we have a wick to the downside and a strong push, a strong body candle, right? This shows that there were sellers present, buyers were strong, and they pushed it up. This does not mean that there was a lot of sellers present, right? So it's still bullish, but it is not more bullish, in my opinion, than a candle like this. Because a candle like this tells you a few things. One, it tells you something. It tells you basically the same analysis as before, and it also shows you if there's a bigger wick to the downside than to the upside. That shows that even though there were sellers present who pushed the price down, and the sellers present that pushed the price down from this high, the buyers were so strong that not only were they able to push the price up from the low, they were able to push it all the way up, and yes, sellers were there to bring it back down, but they still were able to maintain a high price. The smaller, you got to tie in the wicks and the body to each other, right? So the smaller the body gets, the also, of course, the lesser the sentiment is to that direction. If you get a candle like this, obviously this is not bullish, right? Because yes, you do have a wick to the downside, but you can see the wick to the upside is considerably large. And the candle, right, this just make a story of it, right? Sellers brought it down here. Yes, buyers were strong, they brought all the way here. But in the end, sellers were able to push the price all the way back down to the current close. So that is just a very brief overview of how I look at price. You have to, okay, not you have to, but I personally also look at the current candle versus the previous candle. So that's something I look for. Like I'll pull up really quickly before I hand it off to JP. Like I always look at the previous candle. On Unity, I saw it over here. If I were to delete everything right now and just look at this very simply, right, we have the supporting trend line that we're bouncing off of. The current candle, as you can see here, is similar to the second scenario I showed, right? We have a wick to the downside, strong bullish body, and we have a small wick to the upside. So I am more confident in this candle because one, it has a wick to the upside, which shows yes, there's sellers. So it just doesn't mean that there's no sellers, which means that when there's candles that have no sellers, that basically represents that at any given time, there is a possibility that sellers could just step in and just bring the price down. Similar to why I don't like candles that look like this. If candles look like this and have no wick to the downside, this just represents buyers are present. It does not mean necessarily that buyers are very strong. And I like getting into trades where buyers are very strong. And as you guys know, I like getting into calls more than puts. But as I said, to wrap this up, we have a strong bullish candle, and you also look at the previous candle, right? Even though this ended up closing as a bearish candle, you do have a very strong wick to the downside. You have a wick to the upside. So what this represents is even though this is a bearish candle, the sellers were not able to, even though it was a bearish candle, push the price down and close it down at that price. So the buyers were able to push it up. And you could see if I did look at this trade on Thursday, I would have gotten into this because one, we're at a supporting trend line, and if you remember, the support was around this area, so we closed right above it, and also the wick to the downside. So I would have gotten to calls. I would have been up on Unity. But yeah, JP, I'm gonna close my stream so everybody could just look at yours really quickly.
Yeah, we'll just, if everybody wants to flip over to my screen, I'll explain a little bit of price action, and then we'll just call it a wrap. And for those of you guys that have never seen this or don't know what the hell you're looking at, I'll let everybody just kind of switch on over. Just give it like a couple seconds before they do. If anyone has any questions right now on what the hell they're looking at right now, please feel free to ask Bishop channel and type it. What do we have here? This is E-Trade Pro. I've been using E-Trade Pro since it first came out. This is how it looked like in 2003, and it's 2024, and it still looks the same. What you have in front of you right here, ignoring the chart, is level 2 and time and sales. Identifying price action is very important for you as a trader. Level 2 is the in-depth bid and ask of whatever stock you're trading, which shows you where the orders are sitting and where the orders are sitting both for the bid and the ask. In other words, the buyers and the sellers. This right here is game changing. Why is it game changing? Because it allows you to identify not only the time that the bids are coming in, it allows you to identify the size. It also allows you to look for areas of support inside of price action. Right now, obviously, the market is not, we're not trading, nor are level 2 flying. So these 1s, 7s, and 5s, ignore them because these are just placeholders, right? But when the market is open, this thing moves like this. Insane. And you have to get very good at reading price action when you read level 2s. So what ends up happening is when you're in a trade and you're looking at candles and you're looking at areas of support and resistance, there is absolutely no coincidence as to why there will be support, let's say at a certain price here, and that there is support right there, right? So let's just look at a price, for example. Let's just find something that would make sense. So 137.80. Okay, so 137.80, is going to be somewhere down here, right around here. You can see that these wicks down here are right around the 137.80, 137.77 area. So what are they doing? They're at 137.80. These buyers that are here are trying to keep price above 137.80. So right here, you can identify an area of support where if price comes down to here and it gets taken out, you are going to then know that that price was not a strong support, and price action is going to push price down. Remember, time and sales are not market orders. These are limit orders that are being placed in order to get filled, which is the difference between time and sales. Time and sales are actual market orders that are coming in. So for example, if this, which is real-time market orders, are coming in, and you see a flush of green, that means that everyone is buying at market and the buyers are in control. Along with the green on the time and sales, you'll see the bid push up. In other words, it'll go from 137.99 to 138 because the buyers are in control and the price is pushing up. This is how you identify price action. This is how you identify why there's a wick. This is why you're aware that there's a wick at 138.17. Well, there's a wick at 138.17 because there's sellers up here, right? Obviously, as I had mentioned, right now the level 2s aren't running, so you can't see them clearly. But this tool right here is essential for price action trading. If there is anything that you can learn in the market that will be essential for you, both as a day trader and a swing trader, is understanding level 2s and understanding time and sales. Granted, it's not foolproof, but that is when you use it in combination with other indicators. Not only that, but one of the things that I always tell people that want to learn how to read level 2 is that they need to identify the difference between an institutional order, a retail order, and a ghost order, or what I like to call the yankers. What's a yanker? A yanker is a dude that's sitting down here with 10,000 shares of NVIDIA at 137.50, faking support, and when price comes right down here, suddenly that order gets canceled, and guess what happens? Price flushes right through, and it gets knocked the hell out. So even though this looks great and all, it's not something that you can trade off 100% unless you're able to identify, is this guy a buyer or is he a block that's trying to hold support? And if price gets there, is it going to hit or is it going to puke? And puke is an old Wall Street saying. When the market starts to puke, it means it's just flushing. It's just a sea of red. The way that Kevin trades price action is beautiful because he trades it off reading candles. I don't like to read candles. I like to read level 2s and time and sales. So here's a perfect example of how the same thing that you are learning, that Kevin is teaching you, can be much simpler for a lot of people than sitting here looking at these numbers go at 1,000 million miles per hour. Okay? Me, I'm a psychopath. So I like to look at this crap going super fast. And you'll hear me when we talk about it, when we're live trading, I'll say, they got to take out the ass. They got to take out the ass. They're going to take out these 15s. They got to take out the 20s. We're talking about the cents. Because when they start taking out, when the bids start pushing up and price comes in and the momentum is bullish and you start taking out the ask and suddenly you see the shift in momentum and boom, 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 you start taking out all these assholes that are sitting at the limit, guess what happens? Breakout. Because guess what? No one wants to get in the way of this. They yank their orders on the ask because they know that they can move their sells to a much better price somewhere down here. Because why am I going to sell 12,000 units here, when price is pushing up and everybody wants it, I can yank the order, flush the ask all the way down to 139 and get hit here. Here's a perfect example. There's a guy holding 139 resistance with 24,000. This is not done because, oh my God, it's what a coincidence. No, these are done on purpose, which is why it's so important to find areas of support and resistance and use those as your key levels. And I'll end it with that.
Yeah, it's kind of funny because you could see the differences between JP and I. JP has a JP is a maniac. I'm a dumb person. So when I first started trading, I didn't have YouTube to look at really because when I was 12 years old, I didn't look at YouTube. There was not that much free content that's out there compared to now. But one thing I used to read was books, and I used to read this trader's name called Richard Wyckoff. I can't
Like,
Wyckoff. There you go. And one of the things one of his books was about reading tape, and reading tape is similar to reading, level twos and level
tape
threes.
reading. That's
Yeah,
what it is. Tape reading is this.
exactly. So I learned that, and I used to look at this exactly what JP's looking at in the beginning of my trading career. And what I realized was I'm very quite dumb, right? I couldn't process the information that was happening in front of me. I couldn't look at the numbers and stuff like that. So that's why I adapted everything that JP's looking at into looking at the candles and how they move and how the wicks move and everything like that. So this is similar to the whole EA and the Unity thing JP was talking about, right? You could either trade like me, which is like EA, and you could trade the EA thing, or you could look at what made EA, which is Unity, which is what JP is trading. So if you want to get I'm glad JP brought this up. If you want to look at how price works and price action works, even though level 2 is very intricate, if you have the mental stability and the wavelength to understand it, it's something worth looking at, because then you could see, let's say, for example, maybe you want to only look at how the level 2s react once price comes down to a support level, and you want to see how strong are the buyers once the price comes down to that area. So that's one way you could use tape reading or level 2s. So I'm glad JP brought this up. Thank you,
Well,
JP.
one of the,
Yeah.
yeah, I'll end it with this. One of the things that I discourage people from doing is looking at this and saying, "Oh my God, it's so freaking cool." If you become a level 2 tape reader, if you just become a tape reader in general, you will probably a good percentage of the time get wiped out. Why? Because remember that there are orders that are getting yanked. There are institutional orders that are coming in through the dark pools that are not being posted on the level 2s. And those institutional orders just come out of nowhere in the dark pool prints, and you don't have access to them because you don't have level 3 data, and you don't have a Bloomberg terminal, and you're not on the phone talking to a primary dealer asking them what the hell they're doing with the 2 and the 10-year bond, and you don't know who's going to dump what. So reading tape is very important, but it's not 100% something reliable. And if you want to learn this stuff, I'm more than happy to teach you guys. But it's very complex, and it can be it can create massive headaches. But it's another great example of another tool that you can add to your arsenal when you start managing money. So I'll end it with that.
Yeah, no, absolutely. Um, if you don't mind, I'm gonna switch it over. JP, if you could stop streaming, I'm gonna switch over to my screen, and I'll be on. We're gonna wrap this up soon, just in case anybody has any final few questions. We're going to go over that, and then we'll end it. But let's see. Let me bring it to my screen again. And again, last round of questions. Feel free to ask in the Ask Bishop chat. JP and I will answer it to the best of our ability in our personal opinions. But a question I was asked by Bloodhound was, as a swing trader, what are the best time frames to look at trend lines and watch the before breaks? Okay, great question. So, that is okay. So first of all, I answer the first question, which is the time frames. when you're looking at swings, or let me put it this way, when I'm looking for swings, I'll tell you what I'm looking at. First thing is always to look at the weekly. You're not always going to find what you want on the weekly, but if the weekly is working with your sentiment, that might help you out, right? You could obviously see, if you look at the weekly for Unity, for example, we have a support down here, 2211, and we're closing above that. So the sentiment is somewhat bullish, right? From the weekly, I'll switch over to the daily. And sorry, I meant to say you guys can switch over to the stream, my stream. But you can switch over. I usually switch over from the daily. I look at the trend lines that are on here. As JP was talking about before, we had the pennant, or the penante as he calls it, that we broke out of. So I would look at that. And then for entries, I actually like looking at the 2 hour and the 30-minute. I'm a very huge fan of the 30-minute, and my second time frame is the 2 hour. I feel like these are very undervalued and very underutilized time frames. So I use these the most, and I use the daily, just to get a broader perspective. Same goes for the weekly. So for me, that's weekly, daily, 2 hour, and 30-minute. And then I don't really trade trendline breaks, as I feel that's a little bit risky, because you're kind of chasing something. But again, I usually like trading off of bounces or trendline bounces. So if I were to look for a breakout, I would personally look at the 2 hour, 30-minute, see how the candles are, how the price action is near the trend line, see if it's a very strong candle. If it's a very weak candle, obviously that means the possibility of a breaking out is very low, right? For instance, you could look back here on the 30-minute. This last 30-minute candle on Monday, right before close, was somewhat of a strong candle, right? Because you got a decent wick to downside, and you could see that we broke above the trend line. So that's what my answer is for that question. The next question is, what book should I read before I even start? I know Kevin suggested in that doc, and right now, to read Richard Wyckoff books, or Wyckoff books.
Wyckoff.
Sorry, JP. Sorry. But is there anything else?
Trading in the Zone by Mark Douglas.
Yes, and I'm so sorry to say this, I also don't believe in books like that. I feel, this is just my personal opinion, I feel you have to be very strict with yourself. I feel you have to shame yourself until you get better. I feel like books like that kind of do that job, but don't really do it in a good extent. It really depends on the person you are. That book won't benefit me because I'm a very stubborn person, but when you're more open-minded like JP, then that book would really be beneficial. So Richard Wyckoff books are nice, but they're also, you have to consider the fact these books were written like almost 50 years ago or something like that. So they're a little bit outdated in the terms of like, what to read, because obviously the volatility back then was a lot less than it is now. Not saying that it's not relevant to today, because there's a lot of mentality you can read in that. But it's, when it comes to books, it's a little bit hard to find. But my personal recommendation is Richard Wyckoff. JP's recommendation is the Trading in the Zone. YouTube videos are a little bit weird because the YouTubers out there are not consistent, not reliable, very flashy, and they could also just be trying to just shell out their Discord server or their Telegram, whatever, their courses. So just be a little bit eyeful on that. I would say the best thing sorry JP, I'll let you speak in just a second. Best things are usually learned by observation, and we'll go over stuff in other days, but yeah, go ahead, JP.
I would also recommend reading a book by a trader that I really think is great. His name is Tom Hogard. It's The Best Loser Wins. The biggest piece of advice that I can give to anybody that's trying to become a really good trader is trying to understand your psychology. I know that sounds very cliche, but it's very true. I am a very I am a person that's very easily affected by the market, and I don't like to day trade because my emotions run hot. So because I know that my emotions run hot, I am a swing trader because I don't want to be suffering. I don't want to have the pain in my stomach. I don't want to feel like I have to go to the bathroom every 30 minutes. Or for that matter, I don't want to feel like I have to be looking at my screen every second. So the most important thing is number one, identifying what type of trader you are. Number two, identifying your mental stability. And I mean that with the most sincere way that I can. Understand your mental stability and how your brain works. If you can identify that, then you'll identify what type of trader you are. And then learning the psychology of what it is that triggers you and doesn't trigger you will make you a better trader. Trading in the Zone is a phenomenal book by Mark Douglas that talks nothing about trading and more about making you a better person, and you can apply that to your life. And then The Best Loser Wins is exactly what it sounds like. Um, you will lose so many times trading that by force you will become better because you will stop committing the same mistake over and over again. There is no get rich quick scheme. The only way that you become a great trader is by making money and losing it. And that's it. Real losses hurt. And when I mean real losses, I mean trading your real money. You will not ever feel the same until you will never feel the pain of losing real money on trading a prop account. Until you put on real paper on a trade and that money disappears, you will not feel it. Therefore, trade with your real money. Yes, you will lose, but believe me, you will never take that stupid trade ever again when you suddenly took $1,000 account, I'm using a very small number, to $200 because you're going to say, how the hell did I just lose up 800 bucks?
Yeah, absolutely. That's a really great point. Um, that's why like a lot, they always say like trade with paper money to start off, and yes, it's a very good stepping stool to maybe get like technical analysis. But as JP said, the greatest times you learn is when you're in a lot of pain, and unfortunately, a lot of people think trading is smooth sailing, but there will be times where you lose, and if you're observant and you're not stubborn and you realize why you lost, it could be easy to learn from that and not repeat that mistake, right? It's not stupid to do a mistake once or twice, but it's very stupid to make the same mistake 3 or 4 times, repeating it over and over again. That's what insanity is, right? Doing the same thing over and over again and expecting a different result. So yeah, great point, JP. Also to add on to that, um, I think you guys can see my browser over here. We have our YouTube, and the two videos that would go over the mentality of trading, I would say is this one. It's called Why You're Not Profitable Trading. I believe I went over like 17 points and 17 problems that people usually face and how I would combat it. And another great one is proper account growth, right? Out of all these videos, I think 99% of them were me recording them. And the funny thing is, a lot of these videos, like especially like 2 years ago, was recorded on this server, the live session server, as like a live free session. So, reason why we're doing it here, we kind of want to bring it back and post these live recordings. So I'll post the links as you see here on Discord. In the live session server, we have a channel called Live Recordings. You can see the past videos we've uploaded, but also in the links, and I just posted a new one. You could see the FinWiz website JP was talking about. You could look at that there. You got previous tools I talked about, right? Compound interest, Thinkorswim, whatever. But any important links that we talk about, you can definitely look at them over here. And I'll post over here the 2 YouTube videos I was talking about, because that kind of goes over mentality. But yeah, so next question. When you see setup for a swing, but there's a major event coming up like the Tesla event in a few days, how do you handle the situation? Do you enter after event or take a lotto? Well, okay, I'll answer this as if I'm taking the trade. So if there is an event coming up, like the Tesla event, for example, and if I see no setup, me personally, if I see no setup and I'm just taking it based on fundamental analysis or just my perspective, I'm not gonna take it. Like, that's just me. I'm just not gonna take it. I do take risky trades, but I take risky trades that make sense. If I'm just thinking something will happen, I'm not going to take the trade. But let's say, for example, like you could see here on the 2-hour chart for Tesla before the event, this is not bullish, right? You have as ugly as this is, you have an H pattern. Yes, you do have this massive wick over here, but who cares? That was all the way, the day before, right? So there's no bullish sentiment here, and I don't usually take puts, so I'm not taking anything. Let's say, for example, the price action was very bullish before the Tesla event. I'm not going to go into my normal sizing. If, let's say, in an account I take like 10 contracts, instead of taking 10 contracts in that Tesla trade, I might take 4 Tesla calls just to test it out, or even 2, right? Because you have to realize when events come up, like let's say the Tesla event, earnings, rumors, right? You have to keep in mind the volatility will increase, which means your gains could be bigger, but your losses could be much bigger as well. Because if it goes opposite of the contract sentiment, your contract will lose a lot of value compared to what it will gain if it goes your way. So keep that in mind. That's my whole personal way I would handle events, right? It would just basically be according to sizing. And if I don't see a setup before it, then I don't take it at all. Next question is, so would you recommend taking entries on bounces of trend lines? You would enter after a break and it bounces off of it, or just enters when it hits and bounces? And then how far do you go back to chart your resistance or support lines? I'll answer this question because it's very easy. There's no such thing as old when it comes to trading. All right. The older it is, the better it is. That's why JP is so great, right? Because he's so old. But when it comes to your first question, it's very simple. I like trading off of trendline bounces. Yes, you do have the possibility of it breaking the trend line, for example, but the probability of a price breaking through a trend line is lower than the possibility of a price bouncing off of the trend line, especially if that trend line is, let's say, paired with a level. So if there's a level nearby that trend line, I'll be a lot more confident in the trade because I'm like, hey, I got the trend line I could bounce off of, and also additional to that, I got the level, right? Let's say, for example, I have a trend line I'm looking at. Let's just say, let me see if I can find a good example. I can't because it's Tesla. I forgot how dumb Tesla's been. Okay. So your question was, how I trade the trend lines, right? If it breaks out, you could see it's basically the same thing as levels. If the price breaks above a trend line or a level, the safest way I would say, or I would personally trade it, is if it breaks out, I would like for it to come back to either the trend line or the level, and then bounce off of that. And if it bounces off of it and it closes off, and the candle closes as a nice little bounce, or it's about to close as a nice little bounce, I am personally going to get into calls, right? That's just how I trade. If you try to trade breakouts, it's a little bit riskier because yes, it can short squeeze, it can go, but what are the chances of doing that, right? That's a lot more emotion involved versus logically, doing it. So hopefully
breakout trades have a horrible tendency to do something which is very absurd. And Kevin, let's try to wrap this up here. Do me a favor, Kevin. Can you go to your white candle, which is green, and can you just grab the drawing tool really quick, and like whatever it is that you can draw? Yeah. So let's do a breakout trade. Let's just assume that's another green candle. You just want to draw another green candle. Yeah. And what ends up happening is breakout trades have a huge tendency to do this. You'll have that candle, right? Followed by draw a down candle. If you don't mind. What it'll do, no, I want you to draw a big wick from the top of that candle. At the top of that candle, draw a giant wick. Yeah.
Okay. This is so hard to do right now. I don't know why.
But what I'm trying to emphasize is with breakout trades is that when you have a breakout trade, you'll have this giant breakout, and then you'll have this massive. Keep make it go higher. You keep go there. So there you go. The breakout trade's going, and then boom, you you have a massive breakout, and then suddenly you have this giant wick. And what happens is the traders that don't know this breakout is that you have institutional traders that are watching this breakout happen, and they know, Jesus Christ, how big is this wick? You have institutional traders that are watching this, and they're like, okay, we know that retail is going to chase us. So guess what? Everyone's chasing, and then boom, huge limit sell order hits, brings the price back down, and then what ends up happening with that breakout trade? It becomes completely invalidated, and the stock goes all the way back down. This is the problem with trading 0DT expiration SPY or QQQ. This is the problem with trading breakout, and this is where 99.9% of traders get caught because they're chasing the money and they're in the trade late, and then that one wick wrecks your account. And then what do? They flip bearish. You don't think that they can see that on the flow? And then they go bearish, and everyone's chasing the short, and then what does it do? They see it, and then it goes the complete opposite direction. It goes all the way back to the top. So what did you end up doing? You ended up getting caught in a zigzag trade. You hit 2 trades chasing a breakout that went against you, and then you chased a short thinking that it was that wick rejection, and it ended up going up, and now you're twice a loser. Welcome to trading. It sucks.
Yeah, excuse my bad drawings, but that's literally what JP's talking about, like this right here, this breakout. Obviously, wicks are not going to be that huge, but like, let's say if it's like this, whoops, like this, I mean, this is the most possible scenario, right? You have a breakout, you enter in on this breakout, you start to get this little pull up, right? And you might get like 10%, 20% on your contracts, but before you could get out of it. Huh?
And you're super happy. You're like, oh my God, I'm going to make 100%. And then
Yeah. And then it just rejects, right? And it comes down, it comes back to the support that I was talking about, right? And then people be like, shoot, it's going to break below support. And they get out, and then lo and behold, it goes back up. And how many times have you been like, my stop has been hit, I went my way. And the reason is because, you got a bad entry. I'm sorry, but that's just the truth, right? So a really good point by JP. And glad you asked that question. And JP, I do want you to answer this because this ties into a trade that I took. And you are a really good person to talk about this. And before I hand it off to you, before I get into, so this question is, I've been using gold to hedge my RA account, which is SPY heavy, and buying dips using gold options and SPY options in my trading account. My understanding is that the Fed cutting is good for gold. What kind of fundamental environment is bad for gold? Any thoughts on the future of gold and silver? Before I hand this off to JP, I just want to quickly go over the recent silver trade that I took. And this ties into the previous resistance became into support. Whoops, that's the wrong resistance I was looking at. So this was the resistance I was looking. Well, no, it was not. It was this one. So you could see there was a resistance here. We broke above it. We came back. We were testing it here. I was in the silver calls, and then next day the calls went up to, I think, like something wicked. I think it went to, let's see, went to like 300%, right? So like silver is freaking booming right now, and that kind of ties into this question. And we'll go over to a gold chart, and I'll hand this off to JP. But I want you, JP, to answer this question, since you are more of a fundamental guy than I am, and talk about the correlation of silver and gold and how it relates to Fed cutting interest rates.
So let's first identify 2 things. And again, I really don't want to go past 9 o'clock because both Kevin and I have to go do something at 9. But I'll make this as brief as possible. Traditionally, hedges an inflation against currency devaluation. It's also been a hedge against inflation. Since we are in multiple quads in an economic cycle, you have to identify what quad you're in and identify if that quad is going to cycle back into quad 1, quad 2, or if it's going to go to quad 4. I don't want to get into the details of what those quads are because then I could talk here for an hour. The traditional fundamental analysis tells you that if you are going into an inflationary environment, gold is your hedge. So therefore, if you are long the stock market, traditionally, you would expect gold to be down. But right now what's happening is that the market is rallying and gold is rallying, which is not a correlation that should be happening. Um, I don't want to tell you anything that I wouldn't tell myself, but with the way that the markets have been acting, with the VIX trading at near 20, the 10 year and the 30 year, the yields keep rising, right? Because we thought that the Fed was going to cut and therefore the yields were going to go down, right? We thought everybody was going to jump back into bonds. Guess what? They don't give a shit about the bonds and they're rallying into the market. M2 money supply being at its one of its highest levels it's ever been. Consumer credit obviously going up. Defaults on consumer credit going up and ticking up. We actually went to 3.2%, the highest level we've been since 2021 last week. Everything is out of whack. So the question that you're asking, I could answer it to you if we were in a very stable world, in a very normal trading environment, but we're not. So the Fed cuts, the Fed cuts should be causing the market itself and the bond market to catch up to the Fed, right? And the Fed funds should be catching up to the bond market because Fed cuts means yields are going to push down. Well, yields are going up and yields are catching up to the Fed funds again. So it's very strange. I can't answer the question for you the way that you want to answer it. All I can tell you is that in this trading environment, where I believe that we're going to go into probably one of the worst recessions that we've ever seen, where I think that the stock market is not only overvalued, but the PE that it's trading at has surpassed anything that I've ever seen in the 20 years that we're trading, with the dollar doing whatever the hell it wants, with the VIX not understanding what the hell it's doing, and gold rallying to all-time highs. All I can tell you is this. Every commodity and gold trader that I know that works on Wall Street has been buying gold for the past 4 years. And they're multimillionaires right now because for the past 4 years, they've been predicting a huge recession coming. I think we're at the tipping point. I think gold will continue to go up. I think gold will go to 3,000. And I think it's important for you to have gold, actual physical gold, or gold calls to ride the wave in case the market does dump and all of your great, beautiful long positions on your portfolio start to drop, gold continues to rally, and it's a hedge against your portfolio. That's what I would say, especially on your IRA. You'd never want to just be bullish on your IRA. And this is coming from a guy that went through the Wells Fargo FA program but refused to go into finance. Okay? The first thing they teach you, you never are fully long a portfolio. If you are long the S&P or the VOO, Kevin, can you pull up the VOO really fast? The VOO, which is the actual ETF that the big boys trade, which is the Vanguard 500, which is the Vanguard version of the SPY. If you're long in your portfolio or your IRA, you should always be hedging with puts. You should always have a hedge in your portfolio. Let it be VIX calls, let it be gold long, or or selling calls against your position. So I don't know where gold's going to go. I just personally feel that gold's going to go to 3,000. And considering that I don't think that inflation is going anywhere, I think inflation is embedded and it's going to come back. I think gold rallies. As for silver, I'm not a big fan of silver because I was being told by a buddy of mine 15 years ago to buy silver and it was at 18 and silver is still trading at like what is it at now? 20 something?
30.
30? Okay. So it's
Yeah.
taken the son of a bitch 15 years to make 100% of his money.
I
Nah,
mean,
I'm out of
look at this range. Yeah, all the way back from 2020.
it.
Hey, would you be buying bonds right now?
Oof. I mean, again, you're talking to a guy that trades bonds. I literally do trade bonds. And my teacher, whose name I won't say, was the former head of the 2 year bond of the government bond department at UBS from 1984 to 1998. So this guy is a legend on Wall Street, and he comes into our community in our live chats to sometimes teach us about the old school. Um, I think that the 2 year bond can go to 4. I think that the 10 year has a possibility of going back to I'm again, don't quote me on this. I do think that the 10-year can go back to 430. If you're positioning in bonds right now, I would be buying the 2 over the 10. And I do think that the 2-year will go to 4% before it goes down to 3.5. But again, if you're trading bonds, you're scaling into them. You're not, you know, you're not blowing your load buying the 2 at 3.9, right? You don't know. You don't do that. Is it a great investment? Yeah, because if you put in $1 million and you're collecting 3.9% for 2 years and you're connecting a coupon every 6 months, you're making a shitload of money, right? But I still think you can get more yield out of the 2 year.
All right. Yeah, it's a pretty good answer. Um, uh, someone asked, is it possible you could show the bonds you would be purchasing, or did you already answer that?
Well, I mean, the biggest ones that are the most commonly traded bonds are the 2 and the 10. You obviously have the 3, the 5, the 7, and the 30-year and 20-year. Um, it all depends, if you really want to learn about bonds, that's a completely different situation. It's, I mean, you would call your broker and say, I want to buy $10,000 worth of the 2 year, and they would put $10,000 into the 2 year bond. It all depends on what your time frame is and how much yield you want to get out of it. The further away, let's put it like this: the longer you keep your money in debt, because bonds are the issuance of government debt, the further out you put your money into play, the higher the yield. The lower the years that you put into debt issuance, the less yield you'll get. So right now, it doesn't make any sense for you to put your money to sit for in the 10-year govy when it's yielding 4%. Keep it on the 2 year and get 3.95. That zero point 0.5 isn't going to make a difference in your account unless you have $100 million, right? So TLT is something that we trade quite a bit. That's a 20-year. You can be long again, that's a 20-year treasury bond. You could be buying the TLT as an asset class, wink wink, right? And trade it up and down, but you're at the liberty of the 20-year bond, right? It's whatever the 20 year is doing. We trade a lot of options on the TLT. Uh, I'm personally, I was personally long the TLT last week. It had a big pushback. It's holding support at around 93. I mean, again, when you're trading government bonds, you're trading against billions of dollars in the market. Just so you can understand, the guy who's my mentor that Kevin knows, his his book his book was 5 billion. So he was swinging 200 to 500 mil per trade on the bonds. You know, who do you think you are to be buying $1,000 worth of TLT? You know, when these bond traders come into the game, they wreck it. And they've always said it. If you ever want to know where the money's going, follow the bond guys because they know everything beforehand.
All right. Yeah. No. Thank you, JP. Yeah. I mean, I I traded TOT a few times before, and it's worked out pretty well. But as you said, it's definitely intricate. But I think that's
I'll
good.
put it, I'll,
Yeah.
I'll put it like this, and we'll, and then I'm gonna go.
Yeah.
The guy who was my mentor in 1987. If you go look at the stock market crash, the last 3% of the stock market crash in 1987, he was responsible for that 3% down. He was working at a particular bank. He had the Fed over his shoulder, and he's told the story to us in our community. He had the Fed sitting over his corner, and he had the boss of this institution come in and say, "Hey, I'm not gonna say his name. How much do you have, and how much money you got in bonds?" He goes, "I got quite a bit." He goes, "We'll start buying more because we're about to sell all of our positions." This particular bank had not gone. They had not sold. They had not sold. That bank, when everyone thought that was the bottom, created the additional bottom. That is how much money this son of a bitch moved when he went in and bought bonds, and the equity boys sitting at the trade desk were told by the head of this institution to sell. It's one of the greatest stories I've ever said. And standing behind him was one of the Fed presidents who saw them do that and said, "You got to do what you got to do to keep our system going." So it's a great story. Watch the Bond guys; they're the best. They're degenerates, and they're all from the '80s, and they're all divorced and are multimillionaires, and they have issues with the Democrats.
Oh my god. But yeah, no, I can attest to the being divorced thing, and that definitely is true when it comes to bond traders. But yeah, it's always a great story to hear. You know, since JP's a dinosaur, you know, he's seen, experienced, and learned a bunch of things from the past. But again, you know, we're gonna wrap it up here because you know it's pretty much 2 hours since we've been doing this. But hopefully this was helpful for you guys. Again, I can't thank JP enough. He's my business partner, but again, he came on here and you know, he lent us his time, and you know, he's definitely got the experience and the fundamental analysis, and I got the price action and the experience as well. So it's a nice little duo we have. But again, thank you, JP, and thank you guys for joining. We plan to do this every week or every other week. Saturday tickers. If it's not Saturday tickers, then we'll go over like a certain topic, but whatever. But whichever. So this is recorded. I usually record stuff, and they sometimes go right, sometimes they don't go right. But I'm hoping this went right. I'll post this on YouTube, and you guys will get a notification in the live recordings channel. So I'll post on here. You guys will get a ping, and then you could check that. But thank you again for joining, JP, and thank you guys for joining as well. I hope you guys have a good Sunday tomorrow. Russell Wilson is going to become MVP, so feel free to watch that for those who watch the NFL. But all right, guys, thank you, JP, again. Have a nice one. All right, peace.
See you guys later, and thanks for everything. Bye.
See you.